Good day traders, it's Friday, October 6th. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring here is the dollar index in 4-hour chart. The US dollar index was rose against a basket of major currencies on Thursday, up 0.51% to 93.79 as a raft of upbeat data filled investors' optimism of a solid US economic growth ahead of a crucial non-farm payrolls report due Friday. So in what was a busy day on the economic calendar for top-tier data, investors cheered upbeat initial jobless claims and trade balance data pointing to strength in the US economy. So according to the US Department of Labor, reported Thursday that the initial jobless claim was felt 12,000 to a seasonally adjusted 60,000 for the week ended September 30, which beating the forecast of a 7,000 decline. As for the trade deficits, which measures the gap between what the United States import and what it exports, was narrowed to $42.4 billion in August and down $1.2 billion from July, and exports in the August were $195.3 billion, while imports came to $237.7 billion. So the duo of reports comes ahead of a non-farm payrolls update due Friday and expected to show the US economy creates 90,000 jobs in September. So it is the first time since December 2012 that economists' forecast for job creations fell below 100,000 amid concerns that Hurricanes Harvey and Irma disrupted the labor market's activity. So the Fed Reserve closely monitors both labor market's growth and the pace of inflation when it considers monetary policy decisions. So the Fed Reserve signaled at its previous policy meeting that the majority of its members support an additional rate hike this year. And San Francisco Fed Reserve President John Williams said Wednesday he does not need to see inflation move higher to support another interest rate increase this year, as long as the economic data points to continue economic strength. Meanwhile, the Canadian dollar softened on Thursday with the pair USD CAD up 0.38% at 1.2524, just off a 6-week high of 1.2552 hit earlier in the sessions after Statistics Canada said the country's trade deficits widened to $3.41 billion in August from $2.98 billion the previous month. So analysts had expected the trade deficits to narrow to $2.6 billion in August. While the euro was weakened, with the pair EUR-USD slid 0.32% to 1.1722 after the minutes of the European Central Bank's September's meeting showed that members remain concerned over the volatility of the single currency, and some suggested that the economy may still need substantial stimulus for a little longer period of time. So the single currency was already fragile after the regional government of Catalonia announced on Wednesday that they will declare independence from Spain on Monday, and this was aiding to tensions in the region. On Friday, Japan was reported the average cash earnings gains 0.9% compared with 0.5% gains expected, and the markets are short in South Korea and China. So thus, the pair USD JPY was changed hands at 112.83, up only 0.01%, mostly unchanged. The sterling remained under pressures and slipped to fresh 4-week lows on Friday, with the pair GBP USD fell 0.2% to 1.3099, and it was dented by worries over a possible leadership battle at the top of the British government. Divisions over the future of British Prime Minister Theresa May burst into the open on Friday, with allies saying she should carry on a former Conservative Party chairman claiming the support of 30 lawmakers for a plot to topple her. So that came after May's reinforced markets' doubts up about her ability to govern effectively in a poorly received keynote speech at the annual Conservative Party conference on Wednesday. So the conference had been meant to help the reassert May's script on the party as she tries to revive Brexit talks. But after a speech that was interrupted by coughing fits and a prankster, investors saw the Prime Minister's positions weaken further and more vulnerable to leadership challenges. The sterling slipped to 1.3088 at one point on Friday, its lowest level since September 7th, and the sterling has shed 2.2% this week, putting it on track for its worst weekly performance since October 2016. Having a tag in commodities markets, gold price was traded low below its break-even on Thursday, fell by $3.18 or about 0.25% to traded around $1,273.62 a troy ounce, as a raft of better-than-expected economic data pointed to solid US economic growth underpinning on both higher in the dollar. So an uptick in the dollar on signs that the US economy is strengthening pressures gold prices, which were on track for a fourth weekly loss ahead of a non-farm payrolls due Friday. Gold price is sensitive to move higher in both bond yields and the US dollar. A stronger dollar makes gold more expensive for holders of foreign currencies, while the rise in the US rate leaves the opportunity cost of holding non-yielding assets such as bullion. As for the oil prices, it was rose about 2% on Thursday, with the US crude rose 81 cents or 1.6% to end at $50.79. As signs Saudi Arabia and Russia would limit productions through next year, pushed the US benchmark back above $50 a barrel. So Russian President Putin said this week that's a pledge by the organizations of the petroleum exporting countries, the OPEC, and the other producers, including Russia, to cut oil output to boost prices could be extended to the end of 2018 instead of the expiring in March 2018. So Russian Energy Minister Alexander Novak said on Thursday that Moscow would support new countries joining agreements to restrict the oil supplies, and the statement came as Saudi Arabia's King Salman visited Moscow. So meanwhile, President Donald Trump was expected to announce soon that he will decertify that landmark international deal to curb Iran's nuclear program. And the senior administration's officials said on Thursday in a step that could lead to renewed US sanctions against Tehran and could limit Iranian sales of oil. So that would baffle the drillers against losses if the price were to decline, which may spur more US productions and partially offsetting the OPEC-led deal to cut supply by about 1.8 million barrels per day. So other factors also weighed on the oil prices, including the returns to productions of Libya's Sharara's oil fields on Wednesday after an armed brigade forced a 2-day shutdown. So US crude oil exports was jumped to 1.98 million barrels per day last week, and which surpassing the 1.5 million barrels per day record set the previous week. This is according to the Energy Information Administrations. So the increase followed a widening of the discount of the US crude against the Brent, and making US crude oil attractive on world markets. And now let's review the highlighted economy data that released on Thursday, as well as the focus data and events for today, Friday. So yesterday, Australia has released its retail sales for August, and it was as negative 0.6%, which fell to the contracted territory. So besides of that, United States has released initial jobless claims as well as the trade balance for August, and the jobless claim was at 260,000, which is better than expectations of 265,000. As for the trade balance, it showed figures of negative 42.4 billion, okay, which better than expectation as well. And the last data on yesterday is the trade balance for August from Canada, and it was at negative 3.41 billion, which was wider than the previous at 2.98 billion. So as for today, we should focus on the series of labor data that will be going to release by the United States tonight, including the non-farm payroll. And besides of that, we should focus on the unemployment rate and the average hourly earnings as well. So besides of the series of the labor data from United States, Canada will also going to release the employment change for September, as well as the purchasing manager index for September. Okay, so the last data for tonight is US Baker-Hughes oil rig count. its technical analysis sessions. So first, instruments referring to the Great British Pound against the US dollars in 4-hourly charts. So the sterling remained under pressures and slipped to fresh 4-week lows on Friday, which was dented by worries over possible leadership battles at the top of the British government. So the pair GBP USD continued its downside following a closure below the Fibonacci retracement level of 50 at 1.321. And both moving average line in 4-hourly chart can be seen. It was continued expanding downward, signaled to extend its downtrend and fall further. So the next support level could be at the 1.267, and on the upsides, the nearest resistance levels comes in at 1.311. The euro was weakened against the dollar on Thursday after the minutes of the European Central Bank's September's meeting showed that members remain concerned over the volatility of the single currency, and some suggested that the economy may still need substantial stimulus for a little longer periods of time. So the pair EUR-USD currently hovering near to the previous low at 1.169, so closing below this level will lead to drop further towards the next support level at 1.16. As for the upsides, we could refer to 1.178 as its first resistance level. The Kiwi has extended its downtrend and was fell through the previous low at 0.713, signaled to bring stronger band and lead to drop further, so the next support level can be seen at 0.708. Closing below this level, we are suggesting to fall further towards the next support level at 0.702. On the upside, we could refer the nearest resistance level at 0.713. As for the Aussie, it was remained weaker against the dollar and extended losses, and currently hovering near to the Fibonacci retracement level of 50 at 0.773. So closing below this level will provide a signal for shifting trend directions, become downtrend, so it could fall further towards the next support level at 0.764. And on the upsides, only with a closure above the resistance level of 0.782 will consider as a rebound for the repair. The safe haven Japanese yen mostly unchanged on Friday, despite Japan reported better than expected average cash earnings, so the pair USD JPY remained traded within a tiny range between 112 and 113.2, so the pair remained in an uptrend structure suggested by both moving average line which pointing upwards. Thus, closing above the previous high at 113.3 will be a signal for continuations of uptrends and could surge towards the next resistance level at 114. On the downside, the first support level comes in at 111.9. Commodities, gold prices traded below break-even on Thursday as a raft of better-than-expected economic data pointed to solid US economic growth, underpinning a move higher in the dollars. So the precious metal retreated from the Fibonacci retracement level of 50 at the price of $1,280 a troy ounce, signals to drop further by entering a bearish trend. So closing below the support level of $1,262, we're suggesting for further downside, then we could refer the next support level at $1,238. As for the upsides, the nearest resistance levels could refer back to $1,280 a troy ounce or the Fibonacci retracement level of 50, while traders now are on hold their capitals and awaiting the highly anticipated non-farm payrolls report due later tonight from the United States. Oil prices rose higher on Thursday as signs Saudi Arabia and Russia will limit production through next year push the US benchmark back above $50 a barrel. So the West Texas Intermediate crude price rebounds from the psychological support level at $50 a barrel, referring to the MACD indicator. The both movement lines were crossed and pointing upwards, signaled to move slightly higher in short terms. So closing above the resistance level of $51.11 with suggestions for further upsides and could surge back to the previous high at $52.80. On the downside, $50 a barrel is still the strong psychological support level for the oil price. And oil traders will eyes on the rig count due to release tonight by the US Baker Hughes in order to gauge the shale production level in United States. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFX Prime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.